Well, hi everyone, and welcome to the Buffett and Beyond Weekly ETF video letter, and this is ending Friday, July 28th, 2023, and these methodologies are based on the book Buffett and Beyond, second edition. And remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And I just want to bring something out and show you, and these are from the Decision Point people, so it's not our models, it's someone else's, and they have an intermediate term buy signal on just about everything and a long-term trend model buy on just about everything, and they use crossovers. And down here you can see that they're talking about a buy is when the 20-day exponential moving average crosses up through the 50-day moving average, etc., etc., etc. So they go on and on. But what I want to show you here is because there's a buy on all these indices, so they're very bullish on the market, they also have a buy on an intermediate term buy on all the ETFs that they monitor. So just want to show you that people out there are looking at the market in a positive way. And this is something I wanted to show you. We took all the ETFs from the S&P grouping and we plotted them against the S&P 500 index. So here's the S&P 500 index in black, and here's a whole bunch of ETFs down here that are underperforming. Now the top stocks in these ETFs are outperforming the S&P 500, but right now we're just looking at the ETFs. And then we have these ETFs up here that are above the S&P 500, and these are the ones we are going to concentrate on. And which ones are they? Well, you have the QQQs, and you have the XLY, which we went over last week, and you also have the semiconductor ETF, which is this blue line, and this brown line up here is the XLK, which is the technology ETF. So we're looking at the QQQs, technology, semiconductor, and those are our favorite ETFs, and what has snuck in there is the consumer discretionary, which we went over last week. So what we did was take all the ETFs that we just talked about and see what they have returned as of Friday midday when I recorded this. So we're looking at the semiconductor ETF up 34.8%, consumer discretionary up 33%, the QQQs, which is the NASDAQ 100, 43%, technology 42%, S&P 500 19.2%. Now we're having a fantastic year, but if you average all with the 19.2% increase in the S&P 500, but if you average all of the favorite ETFs along with the S&P 500, we have a 34% return. Remember, that's almost double the S&P 500. So you also have to remember that over any 10-year period, and this is a Morningstar report, over any 10-year period, 96% of professional money managers cannot outperform the S&P 500 on any 10-year or during any 10-year rolling period. So this is the holy grail right here, and we're looking at the ETFs that are totally outperforming the S&P 500. Now let's look at the returns of our top stocks in these ETFs. And I'm not showing you the names of these stocks, and that's because it wouldn't be fair to the subscribers who are paying to have their stock portfolios monitored or to be monitoring their portfolios themselves and subscribe to our Buffett and Beyond research letter. So here are the returns of all those stocks, and they average out to be 66.1%. In other words, the top 5 stocks in each of these ETFs up here are down here, and even though all these ETFs, including the S&P, returned 34.7%, if you were lucky enough to have these and reading our ETF letter, you would have all these, folks. And the top 5 stocks are returning 66.1%. So in other words, you take the S&P 500, which 96% of professional money managers who manage the publicly traded mutual funds cannot outperform this number up here. If you had the top 5 stocks in our top ETFs, you would be returning more than three times the amount of the S&P 500, which 96% of professional money managers cannot outperform. So here we are again. These are the ETFs that we're talking about, and when you include the S&P 500, which is returning about 20% here, you would get an average return right around in here. Had you bought the top stocks in those ETFs, you would be returning 66%, which would be about up here. So, folks, you can see how much you're missing out by not knowing which are the top stocks. So, folks, all I have to say is if you want to live on this beach like Jimmy Buffett, if you want to be there like these two folks, you have to learn how to invest even better than Warren Buffett. All right, folks. Good week this week, good month this month, good first half of the year. And folks, we'll see you back here next time.